Hello, Jim here. Last month I had my best month trading options. I did over 10,000 in just option premium alone. That doesn't include dividends and interest. In this video, I'm going to go over what strategies I used, why it worked out so well last month. And at the end of the video, I'll share with you my trades and overall how I did both in premium, interest, dividends, and where my accounts stand now. So stay tuned. I think it's going to be well worth your while. Okay, now I earned 10,643 in just options premium. And why, you might ask, it worked out so well. I always tell people the first thing, the most important thing, is picking good companies at reasonable or bargain prices. And I typically will look at return on equity, return on investment, debt to equity, how much debt that they have in general. I also like to look at companies that pay dividends. I've been an income investor for many, many years, well before I ever traded options. So I really like dividends. There's a few companies I'm looking to take ownership soon. Clorox and more Procter and Gamble, and I like them both because of their dividends. They're dividend aristocrats. They've been growing their dividends for many, many years, and it's just something I enjoy, is to get that dividend every month in and out. So I look at dividend growth. I also look at dividend payout. I also like to see, are they buying back shares or are they issuing more shares? But once I identify that, I'll look at valuation. How do they compare to their sector? Are they really pricey? Is their PE through the roof? I won't trade in companies that have outrageously high PEs like Palantir, and even AMD right now went through the roof, and Google is getting up there now too. It looks like it's potentially hit 300 today. So, once I identify a quality company that's not overpriced, hopefully it's a bargain price, then I like to pick strategies that work really well. My favorite strategy, and I talk about it in a lot of the different videos, is going out like between 30 and 60 days. I like to use a 15 delta for the short put. I tell people, do that first, look at the short put, and then try a $10 spread. What's the price of that long put? If it's inexpensive, then it's well worth probably buying that protection. I also will I might look at the $9, $8, $7, $6 spread. Sometimes you'll find an $8 spread is more profitable than a $10 spread. But rarely do I go outside of a $10 spread, especially on the initial trade. If I roll something and I'm trying to buy more time because maybe the market's going through a rough spot, I might widen the spread in those cases. But typically with new trades, I want to get them. I know they're at a bargain price, but I want to get them like 10% cheaper. And I find that between a 30 and 60 day expiration and a 15 delta, it's like a 10% discount in most cases. Sometimes it's a little bit more and sometimes it's a little bit less. So, I like to reuse that strategy. And then I also like to close positions early. So if a position becomes 60, 70, 80% profitable, I will close it early. One of the goals or things I've changed recently is I'm trying to close as many, if not more, positions than I open each month. And I've been able to do that the last couple of months. I will also limit what kind of covered calls I make. One of the big issues I had back in April when I think I had 9 different positions assigned to me early. I sold what I thought was safe covered calls, but a lot of those stocks shot through the roof, like APP, XLK, and ETF that consist of mostly technical companies. It actually has performed better than QQQ. And then I had a lot of other companies like I believe I had Twilio. I had just a lot of names that just shot through the roof. They shot through my covered call, and I literally could not roll. So I've learned the hard way. So with covered calls, I'm put together a new strategy. I call it my covered call filtered checklist. So I might do a what I call a covered call vertical spread. So I might also buy a long call, just like I do with puts. I'll buy a long call. That will usually allow me to move it up. If the stock shoots through the roof, I can potentially roll that short call and the long call, or I can just get rid of the long call. So I would buy back the call that I currently have, or the covered call I currently have, then I would sell the long, and then I would sell a new short. So you're bringing in a bit more premium if compared to if you just rolling a covered call. So, or in some cases, I might not even sell a covered call. If a stock has been hammered and it's still a bargain stock and it might shoot through the roof, it's better to not even sell a covered call. For me, it's difficult. I started with covered calls 15 years ago, and I still like to trade them whenever there's an opportunity. But I think I've learned my lesson. If a stock is really beaten down and it's a good quality stock, it's going to recover at one point, and it's going to recover pretty substantially. So in those cases, it may not even be worth selling a covered call, or it's a major momentum player. Like I traded on APP when it was like 70 or 80. I also did that with Palantir, and now Palantir is really pricey. I won't trade in Palantir, even though I have a lot of members that will trade in Palantir. So by changing these strategies, making small modifications, not major changes, my profitability has gotten better. So by picking the right company at the right price and then running the right strategy, you've won a major part of the game. Now, can you match what I've done? I have a lot of members that are probably doing better than I am. But I do want to encourage people, it's not a get rich quick. It's not something you can just day one start making what someone like myself has been making. You've got to kind of work up to it. It definitely has a learning curve. So I always tell my members to set goals to, try to improve, monthly and quarterly and yearly. I also talk about planning and when a trade goes against you, mitigate it. Don't just let it expire and take the loss. You can potentially move things around. You can convert a vertical put credit spread into a cash secured put and potentially lower the strike quite a bit. When I buy the long puts, I'm usually using them for protection, but then also it gives me more choices. When I'm looking to manage that trade, I have more choices. And the same thing occurs on the other side. When a stock shoots through the roof and you're missing some upside, you have more choices if you bought that long call. So those are a few of the things I do with the strategies. I also have tried to improve how I pick the stocks. In certain times, I used to have probably more trades that went against me a while back, but I've definitely done a better job picking stocks. But again, closing early has a major impact. And then I do like doing shorter DTEs, but by closing early, you're typically shortening that DTE, which is days till expiration. So you can turn a, $80, $90, $100 annualized return into like a 200, 250. I've had instances where I've set up, a 40, 50 day expiration, and I close after 15 or 20 days. It's not that unusual, especially in the normal market. We've been trending down here recently in November, so it's a little bit more difficult because stocks aren't really, for a while, weren't moving up. They did move up today because NVIDIA posted their earnings, and they again had good earnings. So the whole market is pretty much up today, but I wouldn't be surprised if we start trending down again. But I'm thinking we're going to continue with a little bit of a bounce. Then we might get kind of a downturn, maybe in first quarter at some point. But I keep trading through it. When you pick good companies and you like the price, the short strike, then assignments, I rarely will close and take a loss on a position, again, because I want to own those stocks. Now, if everything goes crazy and we have a major downturn, then I might have a lot get assigned to me at the same time, and I might have to do a little picking and choosing. But I've only had to do that a little bit in 22 and maybe a little bit in April. But typically, you get it dumps down and then it comes back up. So I think probably the second half of next year will be really good is what my expectations are. So next, we'll jump into my actual spreadsheet. We'll go over the different trades. I'll go over some of the same stuff again. If you're curious about my memberships, I try to make it reasonable. I don't force people into long-term contracts. People move, they may go into coaching. I have an elite coaching that's more expensive. Some people will do that for a couple months and then move down to a less expensive But I try to keep it very affordable. The main level, the Trader Club, you get access to Discord as well as Patreon. And in Discord, I have a lot of members sharing their trades, so, and I have a lot of discussions about the economy, about, more complex trades, quite a bit of detail. So take a look. It may be worth your while. Next, let's go ahead and jump into the next section and we'll go over what last month looked like. So stay tuned. Okay, here's my total spreadsheet for last month. I typically take my planning worksheet. If you're a member, this will make sense to you. I take my planning worksheet that I use throughout the month and I convert it into a total spreadsheet. I delete any trades that I didn't make, meaning they're existing trades that maybe I didn't manage this month. I remove those and I kind of clean things up and add totals at the bottom. At the very end, of the video, we'll go over the totals at the bottom to kind of give you a big picture. So I did 10,643. At the beginning, the first day of the month, I just closed a bunch of positions. So I closed the DocuSign position. I closed the PayPal position. And I also rolled a UPS position and also closed it. So with these, the premiums were pretty good. I had anywhere 285% return with 293 in premium, and that was the DocuSign. PayPal, I brought in 193.31. Again, since it's a cash secured put, the return isn't, you have to kind of compare the annualized returns to vertical put credit spread. So compare one vertical put credit spread to another and one cash secured put to another. It's more for me keeping track of which are my better trades. So maybe I want to make them again once I close them. The third one was a roll and a close, a UPS. I was able to roll it and close it and made a pretty good return. I do own some UPS. I wouldn't mind owning more. It has crazy like 6 or 7% dividend. But all those trades worked out really well. Then so the blue, the color coding, the blue means I closed it. The green is a new trade. I did Sprouts, made a trade with it, 90.80, and pretty good return, 121 to 285 premium. So it worked out pretty well. I still have that one. I literally just rolled it today. Best Buy trade. I have, I closed another. This is a vertical put credit spread. I have 100 shares of Best Buy. It was assigned to me back in April, and I want another 100. So at some point, I'll probably add another Best Buy trade. I currently don't have one on cart. This is Instacart. If you haven't watched some of my other videos, I use them. I really like them. I used them yesterday and got my groceries delivered. I just don't like grocery shopping, at least not for major grocery shops. If I need to pick up 2 or 3 things, I don't mind doing grocery shopping, but I like iCart. They make it nice. They remember what you ordered last time. I don't forget things. It'll offer suggestions. They do a really nice job. And they're a pretty good wheel trade. So 37.34 is what I did. And it was a pretty good trade. I made 274, 387% return. This is probably one of my best trades. So required capital was only 925. And it stays in that range. It's a really good company to actually run the wheel on. I had 2 Mara trades. One I rolled, one I closed. Now, Mara's been hammered because of Bitcoin coming down. I still like them. I think they're going to recover at some point. I don't know if it's going to be, later this month, next month, first quarter next year, second or third. My guess is, if I was a guessing person or a betting person, I wouldn't be surprised if they bounce back towards the end of the year, maybe December. You, as a security-based company, did a new trade on them, a vertical put credit spread. Another good trade for having in a small account or running the wheel. I did 29.24, 30 delta. For my wheel trades, I will do a little bit of a higher delta. I'll do like a 30. And this one also had a really good return, mainly because the spread was so thin. So almost a 380% return. Williams-Sonoma, I closed a position I had with them. I've liked trading them. I don't own any, but I've traded them pretty consistently. And I'll probably open another one if they come back down to that range I like. So PayPal, I rolled it. This is a covered call. I do own some PayPal. It also, it's been hammered lately. I think today it went below 60. Another PayPal's another good choice for the wheel. This is Uber, and I had closed it. I had another Uber position. I owned, well, no, I don't own any Uber, but this ended up being a pretty good trade. I don't think it was the same month, but it was very profitable. Chewy, I also like to trade Chewy. I don't feel like they're way overpriced, and I like this spread. This 35.30 has worked out quite well. I had 27 delta, and this one had about 182% return. And this is another, for instance, the 30 was relatively cheap to buy, so I could have done it just selling a cash secured put at 35, but the 30 wasn't that pricey, so I went ahead and bought it. Agilent, I rolled. This is a covered call. Done pretty well with these trades. Now, I'm just trying to beat the dividend. They do pay, I believe, a 3% dividend. ODD, they had earnings yesterday, and they actually beat earnings, but they've been beaten down. This is a position that'll probably get assigned to me fairly soon, and one that, like I talked about in the beginning, I need to probably be really careful with covered calls. And I've had a pretty good return with it. I brought in some pretty good premium. They're using AI for the beauty industry. I think they're also using it for some other things. It's an Israeli company, little debt and really good profitability. And they're in my mind oversold. XLE, I like to trade them. So I rolled one not too long ago. This is the energy sector ETF. They have a pretty good dividend. This trade I did about a 99% annualized. So I made 164 with it. I currently don't own any XLE, and I've been trading it a long time. I did a Coca-Cola trade. I'm trying to do one Coca-Cola trade a week. This was a 70 call that I rolled it way out, and I upped it to 85. So, and I brought in some pretty good premium with it. It's in my brokerage. I'm not doing as much trading in my brokerage because I'm using a lot of the cash that I generate to pay for my barndominium. If you want to learn more about that, it's also in my membership in the Discord. I'm going to set up a separate channel on how to build a barndominium, it's been a real learning process. So because of that, I don't do quite as much trading in my two brokerages, and that'll change once. At some point, I'm going to be moving into the barndominium with my son, and I'll probably sell this house, and at that point, I'll start doing a lot more trading in my brokerage. Zoom, I really like trading Zoom. At one point, Zoom was my favorite company to trade on. They just kind of make good earnings every time, and they don't have much debt. They have a ton of cash. It's just an easy company to trade on. This was a 75, 67, 50. I think they're 81 now, but 167 return. I made 227 on the trade. And then I rolled a bunch of different companies. American Airlines, which is like a wheel trade, I rolled it. I usually make between 100 and 150 on it every month. Dell, this is a cash secured put, and I roll it once a month and make some pretty good premium. So I rolled it up actually from 115 to 120, because I think at the time it was 158. So they've recently come back down. They're like 120 again now here in November. And this was like a 14% return. I made $455. So I've been making like 300 to 500 every month just rolling this Dell cash secured put. So it's a wheel trade. I kind of look at it as a wheel trade. Another roll with Zoom. This is a covered call. I own probably 500 shares of Zoom. So I do pretty well with the covered calls. Intel. This is another covered call. I turned it into a covered call spread and rolled it out. And typically with the calls, you don't make as much. This time I did make pretty good with almost a 200% return. But a lot of times with rolling covered calls, it's more like, you make anywhere from 2 to 6% or something like that. So now we're at Mara again, a new Mara trade. I got a little crazy with Mara. Hopefully it wasn't a mistake, but I do think they're going to bounce back. They got as low as $10. I think $10.60 today. There's a lot of short sellers, a lot of people kind of, saying they're garbage. And I just think there's a major effort by short sellers to really pound them. At some point, like I said before, I think they are going to turn around. Another Coca-Cola roll. This is at 67.50, and I rolled it out to 70 and went out till 918. So, like I said, I have a lot of Coca-Cola. I have it at about every expiration. I have it anywhere from, I believe, my lowest maybe 67.50, all the way up to like 85 or 90. And that's what I did for many, many years, 15 years. All I did was covered calls. Back 15, 20 years ago, you didn't have all these platforms. It was, I had just the old Schwab interface. And I think my first couple of trades, I actually called and had the trading desk do them for me or work with me doing them. So here I closed Marvel. I've liked trading Marvel as well. It's a good AI play. Another Mara roll, but I closed this one. And this, I did a video, I think last Sunday, on power systems, PSIX or P6. And it was a really profitable trade, and they kind of dumped. But this was 317, a 215% return. But I didn't realize one of their biggest investors is a Chinese company, and it's one of the suppliers. So I don't buy or work with Chinese companies, but I haven't made that designation with companies that, Chinese companies have taken major investments in. Something I'm looking at now, and I may change that, but P6 has amazing implied volatility, and it has really good premiums. So I picked up quite a bit of premium in some of the trades that I made. So I could literally take out 4 or 5 every time I roll it down by another $4 or $5 every time I do a trade. ITB, this is an ETF related to the construction industry. I rolled it and, did okay. You don't typically, I think I made 234. You don't typically make as much with ETFs, but they're steadier since you don't have earnings. They're a little bit easier to trade. Another Mara trade, then a Schwab trade that expired, 85.75. Then a bunch of rolls, Procter and Gamble, which I'm probably going to end up owning more of it tomorrow, which I don't mind. I'm going to pick up another 200 shares. I think I already have 200 shares, so I'll have 400 shares. I just like them long term. I've owned them probably 8 to 10 years. The 200 shares I already have. OKTA, I forget what they do exactly, but I rolled them, and they have pretty good premium too. Yeah, 284, 104 yearly return. Salesforce, another good trade, 220, 210. And they've gone up quite a bit. 254 when I believe they may be like 230 currently. But I rolled them, brought in 177, a little bit of a lower return, 61%. Then I did AMD, closed 2 positions because they shot through the roof. Went up to 252. If you watch some of my previous videos, I thought by the end of the year, they may be 200. Well, they shot through that. I remember a lot of the naysayers, they were saying, well, they're not worth it. Don't even spend 150 on them. But now look at them. I think they even got close to 300 at one point. So I closed 2 more positions with them. DocuSign, I did another roll. I also like to trade DocuSign. And again, at this price range, around 65.55. And I believe I brought in some pretty good premium, 213. It was like a 76 annual return. Then another Coke, FCX, one of the mining companies I like, 38.28, 26 Delta. And they have some pretty good numbers. I think they'll be somewhat impactful for onshoring, especially for the different kinds of mining. Another Marvel trade that I rolled, 75.65, and I kept it the same and just rolled it out to the next month and brought in another 234, 92% return. So we're getting towards the end of the month. So EXE, forget who EXE is. But I had a new trade in them. I did 90, 80. At the time it was 100. So again, like a 10% return, brought in 195. And I believe, yeah, 1219. So it was a little bit of a shorter trade. It worked out pretty well. Sorry, I can't remember what they are. Ethereum, I decided to try this almost like Mara. I wanted to learn a little bit more about Ethereum. So I did a trade 35.30 and it worked out well. Ethereum has dropped. I think it got down to like 26.27 today. But I brought in 238 and like 288% return because I didn't go very far out. I went just out a couple of days. I went out 24 days. And then NVO, this is Nordisk. It's a drug maker. And I think they're fairly near their lows. So I've been kind of rolling them every month. My cost basis is probably in the mid 40s. Rolled it again, new expiration 12/19, 53% return. And my guess is I'll probably end up owning them. I do have 3 contracts for them and the Ethereum trade. PayPal, this is a cash secured put. I have 300 shares. Yeah, I have 300 shares of PayPal. I wouldn't mind having another 100 and then running covered calls near the money. But a good trade, not the best, 15%, but. And then another cart trade that I rolled, made pretty good premium, 183 this time, or 181, 165% return. Mara, a vertical put credit spread, 16.11. And you might wonder, well, why are you doing so much with Mara? But again, when it's a $15, $16 stock, that's like doing 10 of it would be like doing $150 stock. So, and I like to do multiple trades. I typically will do 4 contracts, but I'll have them with different expirations. I may have 1 or 2 in one account, 1 or 2 in another account. So it seems like a lot, but this is in my Schwab brokerage. So, and then ODD, this was a new trade, cash secured put. And I think turned it into a cash secured put. I believe it was 55.50, and I rolled it and I converted it in from a vertical put credit spread into a cash secured put at one point. I'm just showing that as a new trade, but I brought in some pretty good premium, 576. So my ODD, again, I'll probably own those shares. Will probably be in the low to mid 40s. I should be able to sell covered calls, but again, I'm going to need to be careful with selling covered calls. And then Amazon, I closed an Amazon trade and it was 205, 195, and Amazon also shot through the roof. I think if you take the Magnificent Seven and you remove them from the S&P 500, I believe we're flat for the year, maybe slightly down. Most of the growth has been in the Magnificent Seven. So that's why there's always opportunities. There's always companies that are bargains. Like Mara right now has been knocked down pretty majorly. So is ODD. So is PayPal, even Nova Nordisk, NVO. There's definitely some opportunities. So here's the totals. I did, in my Schwab account, I did 1381, which is like a 0.29% return. So if you multiply that by 12, you're talking, it's like 3 or 4%. But again, with my barn dough, I'm not doing a whole lot of trading in there. I think I paid $25,000 towards HVAC and the electrical and even the framing and the garage doors. I think I bought all those outright using those accounts. The Fidelity IRA, I did 65, 66, which is like 1.24%. Which if you multiply that by 12, it's like 13, 14, just in premium. That's not growth. That's not like, how much the account grew that month. And in my Fidelity Roth, I typically do the best, 26.95, which is a 3.69% return. And then, my goal is to try to get 3% in the Roth and closer to 1.5% in the IRA. Now in November, we've kind of had a rough November, So, my guess is November is not going to be as good as October. Plus, some of the stocks have been hammered recently. So, total premium is 10,643, which is just right just shy of 1%. So it's like adding 12%. Again, though, that doesn't include dividends or interest. And then dividends and interest, 3182. And I actually take this literally from my brokerage statements. I go into all four of my brokerage statements, my two at Schwab and my two at Fidelity. So that's exactly what I made between dividends and interest. This is total cash earnings, 13,826. And then my portfolio value, which I think it's down 10,000 compared to the previous month, but I did spend, like I said, I believe it was 25,000 in my two brokerage accounts, paying for barndominium stuff. Daily would be like 601. It'd be like earning 601. And then here's my different here's my two brokerages. So I have 374 in one and 102 in the other. And again, I'm using quite a bit of cash. I should be able to grow these again once the Barndo's done. But the Barndo itself, in the end, I'll have a small loan on it and it'll be worth a lot. It's 5.9 acres. My son's shop will be in the back. It'll be a living space in the front. Plus, we have all this land behind us that, down the road we could turn into other uses. And in my Fidelity, I had 530, 300. And my Roth was 73,066 for a total of 603, 372. Again, these are taken directly from my Fidelity statements. If you're not sure how to do that, especially for the dividends and interest, at the very end of your statement, you'll see a breakdown on a monthly basis of the interest and dividends, and I'll even show what's pulled from the money market accounts. And then my grand total. So what did I learn this month? So I had 23 days of trading. So October, I did get another day. So some days, I think average is 21 or 22 days. I think November may be more like 20 days with Thanksgiving and the day after. Well, I'm not sure if the day after Thanksgiving the markets are closed. I think they are, but it's probably more like 20 days. Did really well in my Fidelity Roth. So, and that's been pretty standard. And that's probably the most important account to do really well with or try to increase it. You have so many choices or better choices tax-wise and pulling money out of it. So you definitely want to try to grow your Roth as quickly as possible. 49 trades, 9 calls, and 40 puts. So it's usually closer to 50-50, but this time I definitely had a lot more puts than calls. Closed more trades than I opened. I closed one more than I opened, and that's the third month in a row. My goal is to close more and be able to make more trades with no more cash at risk. Currently, if you're curious about my cash, what I'm trying to do, I'm trying to keep 50% cash in my Roth and about 30%, 35% in my IRA. And that's where I currently stand. Covered calls are becoming biggest issue. Clipping my wings, that's where I talk about doing what I call a covered call spread or not writing a covered call at all on a momentum company or a company that's a really good company that's been beaten down that if it recovers, it's going to majorly recover. The other issue with covered calls is they lock you into a security for too long. So you might roll for 5 or 10%. I won't roll unless it's 15%, especially in my retirement accounts, because if it gets liquidated again and turned into cash, I don't have capital gains. But be careful with rolling. You want to be able to earn enough. That's where I set like 15. If I can't roll it and at least make 15% annualized, then I won't. I'll just let it get called away. And then I've learned my lesson, and going forward, I won't quickly sell a covered call to lower my cost basis. A lot of cash went out to help fund the Barndo. Again, I believe it was like 26,000. And we're getting there. We're meeting with insulation people, and once they're done, we found out one of the insulation companies also does drywall. So at that point, once we get through insulation and drywall, then we're kind of on the home run stretch. So and I do share pictures again in my membership. If you guys are curious, you could see it there. And I do have some landscaping we're going to need to do, but that's what I wanted to share with you guys. What are you doing? Are you trading options like this? I'd be curious to hear what you might be doing differently. So share a comment. I typically will respond within 24 or 48 hours. And as always, I just want to take the time to thank you for watching the channel. I do truly appreciate it, and I hope you have a wonderful rest of your day.